Understanding ETF stock funds, a comprehensive guide. Exchange-traded funds, ETFs, have become a popular investment vehicle due to their flexibility, diversification, and ease of trading. This exploration delves into what ETFs are, how they compare to index funds, and examines some of the top-performing ETF funds available. What is an ETF? An exchange-traded fund, ETF, is an investment fund traded on stock exchanges, much like individual stocks. ETFs hold a collection of assets, such as stocks, bonds, commodities, or a combination of these, and they aim to track the performance of a specific index or sector. Unlike mutual funds, ETFs are bought and sold throughout the trading day at market prices, which fluctuate based on supply and demand. Key features of ETFs. 1. Diversification. ETFs provide exposure to a wide range of assets, reducing individual investment risk. 2. Liquidity. Being traded on stock exchanges, ETFs can be bought or sold at any time during market hours. 3. Transparency. Most ETFs regularly disclose their holdings, allowing investors to know exactly what assets they own. 4. Cost efficiency. Generally, ETFs have lower expense ratios compared to actively managed funds because they typically passively track an index. Comparing ETFs to index funds. ETFs and index funds are both designed to provide broad market exposure and minimize management costs. However, they differ in several important aspects. Trading mechanism. ETFs. Traded like stocks on an exchange, ETFs can be bought and sold throughout the trading day at market prices, which can vary from the net asset value, NAV, of the fund. Index funds. These are mutual funds that aim to replicate the performance of a specific index. They are bought and sold at the end of the trading day at the NAV, and transactions are executed at this price. Costs. ETFs generally have lower expense ratios due to their passive management style. However, investors may incur brokerage fees or commissions when buying or selling ETF shares. Index funds typically have slightly higher expense ratios than ETFs, but do not incur trading commissions. Minimum investment. ETFs, there is no minimum investment requirement beyond the price of one share, making them accessible for smaller investors. Index funds often have minimum investment requirements, which can range from a few hundred to several $1,000s. Tax efficiency. ETFs, generally more tax efficient due to their unique structure that allows investors to buy and sell shares without triggering capital gains. Index funds can be less tax efficient because of potential capital gains distributions when the fund manager buys or sells securities within the fund. Top ETF funds, examples and analysis. Below are some of the top-performing ETFs, reflecting a variety of investment strategies and sectors. SPDR S&P 500 ETF Trust. Objective tracks the S&P 500 index, which represents 500 of the largest U.S. companies. Overview. One of the oldest and most widely recognized ETFs, SPDR offers broad exposure to the U.S. equity market. It is known for its liquidity and strong performance, mirroring the S&P 500's returns. Invesco QQ Trust, QQQ. Objective tracks the NASDAQ 100 index, which includes 100 of the largest non-financial companies listed on the NASDAQ stock market. Overview. QQQ is heavily weighted towards technology and growth stocks, making it a popular choice for investors seeking exposure to the tech sector. Vanguard Total Stock Market ETF, VTI. Objective tracks the performance of the CRSP U.S. Total Market Index, representing the entire U.S. stock market. Overview. VTI provides exposure to large, mid, and small-cap stocks, offering a comprehensive representation of the U.S. equity market. iShares MSCI Emerging Markets ETF. Objective tracks the MSCI Emerging Markets Index, covering large and mid-cap stocks in emerging markets. Overview. EEM offers exposure to economies with higher growth potential, but also higher volatility, appealing to investors seeking international diversification. Vanguard Real Estate ETF, VNQ. Objective tracks the MSCI U.S. Investable Market Real Estate 2550 Index, representing U.S. real estate investment trusts. Overview. VNQ provides exposure to the real estate sector, offering a way for investors to diversify their portfolios with real estate assets. iShares Core U.S. Aggregate Bond ETF. Objective tracks the Bloomberg U.S. Aggregate Bond Index, which includes a broad range of U.S. investment-grade bonds. Overview. AGG is designed for investors seeking income and stability through exposure to a diversified portfolio of U.S. bonds. SPDR Gold Shares. Objective tracks the price of gold bullion. Overview. GLD provides investors with exposure to gold prices, serving as a hedge against inflation and economic uncertainty. ARK Innovation ETF. Objective: invests in disruptive and innovative technologies, focusing on companies poised for significant growth. Overview: managed by ARK Invest, ARK is known for its high growth potential and focus on cutting-edge technologies. iShares Climate Leadership Index ETFs. Objective: tracks the performance of companies with high climate leadership scores. Overview: Clicks focuses on companies that are leading the way in environmental sustainability, appealing to socially conscious investors. Conclusion: exchange-traded funds, ETFs, provide investors with a versatile and cost-effective means of gaining exposure to a diverse array of assets. By understanding their structure and comparing them with index funds, investors can make informed decisions about which investment vehicle best suits their financial goals. The top ETFs discussed exemplify the range of options available, catering to various investment strategies and sectors. Whether seeking broad market exposure, sector-specific investments, or international diversification, ETFs offer a valuable tool in the investor's toolkit.